Hello everyone, welcome to Exam B. My name is Chandraprakash Joshi. I am ex-AGM RBI, and as Dr. APJ Abdul Kalam says, all birds find shelter during a rain, but eagle avoids rain by flying above the clouds. So problems are common, but attitude makes all the difference. In this video, which is the fifth part, we are discussing another 20 important questions for RBI Grade B 2022. What is the limit up to which a deposit taking NBFC can accept deposit as per the RBI guidelines? What part of or what times of their NOF net own funds they can accept the deposit? The correct answer is 1.5 times, and I'm happy to see your participation in the series. 12 to 60 month is the time, 1 year to 5 years for the acceptance of the public deposit in these NBFCs, and the maximum limit is 1.5 times of the NOF. Only NBFCs, those who have investment grade rating. First question for today: the key areas to be monitored under revised prompt corrective action. So this prompt corrective action PCA framework is a very important framework for weak banks. RBI has developed this framework to identify the weak institutions. Which of the following does not include in this? And you will be surprised to know it is profitability. And this has been a very recent development. You have to be aware about such things. If you are reading a book, you may not find this because this has been effective from January 2022. So earlier profitability was one of the criteria under PCA from corrective action, but now it has been removed. RBI presented three parameters and ROA, that is return on asset. Return on assets tells you the profitability. So what are the three parameters here now? Capital, asset quality, and leverage. How the capital is monitored? By CRAR or CET, or asset quality are monitored by net NPA, and leverage is tier 1 leverage ratio. So there are different threshold for it, three risk threshold for each parameter. You have to know this in detail because PCA framework is very important for phase 2 preparation. At Exam B, we provide you all this in terms of the crisp note, also in the videos where we make you understand this concept of practicing. There are a large number of practice tests. You can create your own test matching your difficulty level of the preparation. BPDF, please download. If you are not reading it regularly, start it right away. Participate in any quiz. Previous year questions are very important, and your time is very precious. Time is most common resource, most scared resource. Utilize it for your selection by preparing 50% faster at Exam B. The next question is, RBI has approved the transfer of rupees X amount as the surplus to the central government, and it was also in the newspaper. So the question also asks you what was the amount last year. So now you remember both, and the last year this amount was 99,000 crore rupees, 99,122, and this year it was 30,307. If you apply this logic of finding out what is there this side, maximum 99,122, here also 99,122, here also, so maximum time it is this, and here 30,307, 30,307. So two times it was there, two times was this. So are you getting it? Makes life little easier. So you can eliminate the option. There are chances you do it correct. Be intelligent in the exam hall. Okay, here you see that last year it was 99,000 crore and maximum was 1,23,000 crore in 1819 when RBI transferred this. Important to know here is the Bimal Jalan committee recommendation for this, because RBI, what RBI does with this extra money? So what is the surplus? Surplus is a kind of profit which RBI generates. So RBI's balance sheet, because RBI is a non-profit making institution, it is not called a profit, it is called surplus. RBI keeps that surplus by creating some contingency reserve for a bad situation. So as per the Jalan committee, the range for creating contingency reserve is 5.5 to 6.5 percentage of the balance sheet for the contingency buffer. That is what Jalan committee suggested, and this time RBI again created this contingency risk buffer at 5.5%. Receivable Exchange of India Limited came into existence in 2017, being the first TRED system of India. It is partnered by which are the institutions, and the correct answer is the option 1 should be NSE, and 3 banks, that is SBI, ICICI and Yes Bank. So here the idea is to create this platform for the trade receivables discounting system, and it was incorporated in 2016 as a joint venture between SIDBI, the SIDBI, the Apex Financial Institution for Promotion of the MSMEs, NSE, National Stock Exchange India Limited. So this RXIL operates this trade receivable discounting system as per the TREDS guidelines issued by RBI. TREDS is an institutional mechanism set up in order to facilitate discounting of the invoice of MSMEs from corporate buyers through multiple financiers. It went live in 2017. SIDBI, NSE and 3 banks are SBI, ICICI and Yes Bank, and ICICI Securities, SBI Caps are among the promoters. In budget, the current budget 2022-23, the government announced that National Tele Mental Health Program will be launched to improve the quality of mental health. How many telehealth centers are going to be set up? The correct answer here is 23 such centers are going to be set up. NIMHANS, National Institute of Mental Health and Neurosciences, being the nodal center, and the International Institute of Information Technology, Bangalore, providing the technical support. In January 2022, the government converted with RBI 1.2 lakh crore worth of the government securities and the oil bond maturing in next 3 years with bonds of the longer maturity. These bonds are getting matured, so now these are converted to longer maturity. Which of the following is correct regarding the oil bonds? Oil bonds are issued to the oil marketing companies as a compensation in lieu of the cash subsidies. Yes, this is correct. They are not zero coupon bond because they are long maturity. There is a coupon and they are not eligible for SLR securities. They are eligible as a collateral for market repo transactions. So in repo is used in case of giving money to the bank. So if banks are having these oil bonds, so they can keep that with RBI and get the money against these, but these are not SLR securities. Understand, these are not eligible for SLR. These bonds were issued to oil marketing companies between 2005 and 10 in lieu of the cash at a time when the government used to fix the fuel price. Then what happened? 2010 fuel price were deregulated. Petrol and diesel prices were earlier fixed by the government to cushion the consumers from the price shocks. So earlier in 2010, which was deregulated, mirroring the market price of the crude oil and the oil bonds were discontinued. However, the previously issued oil bonds are to be serviced till the redemption. Then it was market based. What does D stands in PMG DISA? The correct answer here is digital. PMG DISA stands for Pradhan Mantri Gramin Digital Saksharta Abhiyan, incorporated by government in 2017 to promote the digital literacy in rural India by covering 6 crore rural household, especially that are able to operate computers digitally and computer and other devices to receive emails, browse internet, access government services, and do cashless transactions. Which of the following statement is correct? Beti Bachao, Beti Padhao is one of the flagship program of the government launched in 2015. The main reason for the launch of the scheme was to address the declining child sex ratio and other related issues. Yes, it is a tri-ministerial convergent effort of the Ministry of the Women, Ministry of the Child Development, Health and Family Welfare and Education. All three are correct here. And what is child sex ratio? It is defined as the number of girls child against 1000 boys between the age group of 0 to 6 years. 3 ministries, these are correct. And the focus was on advocacy, awareness of the campaign, multi-sectoral action in selected 161 districts where the child sex ratio was very low, enabling girls education, effective enforcement of the preconception and prenatal diagnostic technique. Which of the following equation of the deficit financing in budget are correct? What is fiscal deficit? Three definitions are here. Total expenditure minus total receipt except the borrowing. This is correct. Primary deficit and revenue deficit. Primary deficit is fiscal deficit plus interest payment. No, this is not revenue deficit. Revenue expenditure minus revenue receipt is also correct. The primary deficit is fiscal deficit minus interest payment, and effective revenue deficit is revenue deficit minus grant for the creation of the capital asset. So remember this formula well and also understand this. The example which is the following correctly describes an open economy. Simple question. It can be asked in phase 1 also and ESI phase 2 also. Open economy is an economy that interacts with other countries. See, you have to eliminate other options and you have to always find the best option. So open economy that facilitates free entry and exit. Who said free? So today India is also an open economy, but is it a free economy? Can you freely trade? No. Today government of India has now banned the export of wheat. So government always has control. Nothing is completely free entry and free exit. Remove that option. An economy that has no government role, again, this will never be true for any economy. A country that has a porous border. What does that mean? Again, a vague statement. An economy that does not have a tax system. Who is that economy in the world which does not have a tax system? Answer is now easier. Which of the following statement is correct? Pradhan Mantri Fasal Bima Yojana was launched in 2006. Important one, do you remember the year? This is not correct. The scheme is being implemented through 18 general insurance companies, including there are the 5 government sector companies. Under PMBY, the uniform maximum premium of 2% of the sum insured is paid by farmers to all kharif crop and 1.5% for rabi crop. This is also an important information you shall know. And second and third are true. The scheme was launched in 2016. So here 6 and 16, 10 years. Remember such important one. The percentage also 1.5 and 2% for rabi and kharif crop. A corporate bond issued by an Indian company in the overseas market in a currency that is different from that of the issuer. So here issuer currency say rupee, and it is issued in say US market in USD, and the investor has an option to redeem the investment on maturity on converting it into the equity any time during the currency of the bond is called that. So suppose there is an investor from America, USA, it had invested in which currency that investor can redeem the money. The correct answer is here FCCB, foreign currency convertible bond, because the investor here has the option to convert it into the foreign currency, because if it is an Indian company will pay it in the rupee, but the investor here has an option to convert into the dollar at that price at the time. Which of the following statement regarding the V-shaped recovery is not true? So what is V-shaped recovery? This has been talked often last 2 years that India will witness a V-shaped recovery, or then there was talk about some more shapes of recovery. So the correct answer here is it is the economy quickly rising after an economic crash and makes up for most of the lost ground before settling back to the normal trend. Suppose this is an an economic growth rate, it dips because of some reason. The reason say in 2020 was COVID. Then it further improves when the COVID was gone. So the growth, the GDP has come to a normal level. So that's why it is called a V-shaped recovery curve. And there is another shape recovery curve also, that is Z-shaped recovery. It is a most optimistic scenario in which it quickly rises after an economic crash. It makes up more than a lost ground before settling back to the normal trend line, thus forming a Z-shape. It is economic disruption lasts for a small period wherein more than people's income is their ability to spend ability to spend is restricted. V-shaped kind of recovery has been observed in 2021, recently, 1921, sorry, 1920, 1921, a century back, and in 1953, the US. In this, the incomes and jobs are not permanently lost. Economic growth reverses sharply and returns to the normal before it gets disrupted. What is the upper limit for fund transfer under RTGS? RTGS and NEFT are important institution for fund transfer. So there is no limit in case of RTGS. In case of the minimum amount required in RTGS is 2 lakh rupees. So you cannot do RTGS for 200 rupees, for which we used to do money order earlier. 2 lakh is the minimum. There is no upper limit. The limit for FPI investment in government securities is at what percentage of the stock of the securities? Here the correct answer is 6%. The limit for FPI investment in government securities is 6%, and state development loan it is 2%, and in the corporate bond it is 15% of the outstanding of the securities for FY 22-23. The aggregate limit of the notional amount of CDS sold by foreign portfolio investors shall be 5% of the outstanding stock of the corporate bonds. Accordingly, additional limit of 2,20,000 crore is set up for FY 22-23. What is the minimum net owned fund requirement for NBFC to be eligible to issue a credit card? So NBFCs can issue credit card, but they have to have 100 crore of net owned funds. Without prior approval of the RBI, they are not allowed to issue any credit card. Any company, including a NBFC taking company intending to engage in this activity, requires a certificate of registration apart from specific permission to enter into the credit card business. The prerequisite for it is 100 crore minimum net owned fund. Without obtaining a prior approval from RBI, NBFC shall not issue debit card, credit card, charge card, or similar product virtually or physically, because entering into payment system requires approval from RBI. How much interest subvention is provided to farmers for agriculture and allied activity under KCC Kisan Credit Card Scheme? And know little bit more about KCC. So the correct subvention is 2%. In order to provide short-term crop loan and short-term loan to the activities including animal husbandry, dairy, fishery, beekeeping, up to an overall limit of 2 crore to farmers through KCC at a concessional interest rate during the year. It has been further continued to provide interest subvention of 2% per annum to the lending institution, that is public sector bank, private sector bank, in respect to the loan given by their rural or semi-urban branches, small finance bank, and computerized primary agriculture cooperative society PACS, which has been created with the scheduled commercial bank on issue of their resources. An additional interest subvention of 3% annual will be imposed of those who farmers have been repaying on time. So they will get additional interest subvention of 3%. Otherwise, common is 2%. So for them it will become 2%, 2 plus 3, 5%. How much interest subvention is approved to farmers for agriculture and allied activity under KYC scheme? Under KCC scheme, Kisan Credit Card. So this is also simple answer. 2% is the answer for KCC. The value of SDR. How is the value of SDR is decided? You have SDR are these special drawing rights. Must have read about the forex investment details. So equivalent to 1 USD. What is the value? Based on the basket of 5 currency or average value of the USD and euro based on the value of the gold, or decided irrespective of the basket of the currency. So the second option is correct here. So there is a specific weight, like dollars is weighing highest here 41%, followed by euro, and then yuan, Chinese, then Japanese yen, and pound sterling. So these 5 currency has these certain weightage to decide the value of the SDR, special drawing right. Chinese renminbi is the newest currency which is added in 2016? If that is the exam question. The current limit under the liberalized remittance scheme of resident individual per financial, how much in a year one resident can remit is 2,50,000 USD per financial year, April to March, for any permissible current or capital account transaction or a combination of both. This scheme was introduced with an amount of 25,000 USD in 2004, liberalized remittance scheme, and it has been revised periodically depending on the economic situation. We need more foreign currency, we will increase the limit. Which of the following statement is true about Stand Up India scheme? The Government of India has extended the duration of the Stand Up India scheme up to 2030. It was launched in 18. The offices of SIDBI and NABARD shall be Stand Up Stand Up Connect Center. Loans under the scheme are available for greenfield projects and brownfield projects. The correct answer is option C. The offices of the SIDBI and NABARD shall be Stand Up Connect Centers. The scheme is there up to 2025 and it was launched in 16. Seeks to promote entrepreneurship at the grassroots level for economic empowerment and job creation. The offices of SIDBI and NABARD shall be Stand Up Connect Centers. Loans under the scheme are available only for greenfield, not for brownfield. The objective of the scheme is to facilitate loan from scheduled commercial bank of value between 10 lakh to 1 crore to at least one SC or ST borrower and one woman borrower per bank branch for setting up greenfield enterprises in manufacturing, service, or trading sector. Now you answer this question: who publishes Human Development Index (HDI)? One of the favorite questions RBI has is something about HDI. The rank, change in the rank, who publishes. In fact, I remember when I wrote the exam, I started my first descriptive question on ESI, which was on HDI. Write your answer in the comment. I will discuss this in the next video. And for all such important questions, please go through previous videos. Aim high. Small aim is a crime. Have great aim, then work hard for your success. Thank you for your time. Subscribe to the channel. iExamB helps in 50% faster preparation. Remember that.